Yo.
Good morning and welcome to another edition of Roadhouse Live. We are live. Today is October 30th, 2023. The month is almost over. We are entering the Super Bowl week, the week. It's kind of like the Super Bowl. You got the federales, you got Apple. I don't know if there's a week more stacked for the Super Bowl than this one. This is the Super Bowl. So with this being said, there's always a lot of noise, a lot of jargon, a lot of back and forth, a lot of, hey, how are we going to game the headlines? How are we going to game the system? How are we going to game anything and everything? Yeah. That's what we got, Bender. The Super Bowl.
The Super Bowl. I thought
of trading.
Yeah.
That's what we
All
got.
right.
That's what we got. So we have a nice little gap up. Looks like it's, there's some pressure right now. The dollar's been kind of wibble wobbling. I think you're at this point, you can really expect pretty much anything. You can expect it to moonshot. You can expect to dump. You can expect to go sideways. Flow, while there were some interesting shots taken towards the end of last week to the upside, flow is still very, very bearish, and we have to acknowledge that coming into the week. What happens once the market opens and, rounds start being fired and people start positioning? I think that in and of itself is going to really, really give us an idea of what we're all thinking. Now, as far as what I am thinking and what I believe that the interest rate hikes are done and over with. I believe Yellen being trotted out last week was basically signal that all this shit is over, and that we will now start, leveling out on rates, assessing the economic damage that's been done by the Fed over the next several months, ultimately with rate cuts happening sometime in early to mid 2024. So that's kind of where my thought is. I don't believe that this market wants to stay as short as it is going into Wednesday. I don't believe that. If they do, we have a bigger problem than I thought that we had. I think some of us believe that this sell down has been a bit egregious. Some are very happy at the sell down for the opportunity to get back in, opportunity to go ahead and position themselves moving forward. Don't know what the right answer is here, but I know where my head is and believing that rate hikes are over, and that will be signaled on Wednesday. Now, it's not going to be blatant. He's not going to come out and say, hey, we're done raising rates and blah, blah, blah. But I do believe that rate hikes are over, and I'm putting myself out on the line, kind of stating that, and will play the market with that mentality. With this being said, Bender, I don't know. It's like these ERs keep on coming in. They ain't too bad. SoFi reported pretty decently, guided up. Not as amazing of a response as I had anticipated, considering that they've gotten bludgeoned over the last several weeks like everybody else. But, here we are. Another week, another grouping of data to work through, another grouping of narrative and shenanigans, both domestically and foreign, to deal with. So the question is, are you ready?
Are we ready?
Are we ready?
Today's a weird day. I got up this morning and it was 36 degrees outside and raining. Yeah. I'm just like,
what, did you move next door to me?
Well, again, going back to like Texas weather, it's just like, okay, 2 weeks ago it was 101.
Yeah.
And now we have this.
Yeah, no, it's like Saturday.
What the fuck?
It was nice 70s, really, really pretty. And then now it's like there's snow in the forecast for this week. So.
Yeah, we don't have snow, but yeah, this is like just one extreme to the next.
Yeah, it's definitely a different season from last year to this, at least for me. Definitely different. But man, I don't have a whole lot. It's like the headlines are the headlines. You want to look at ERs and they're solid, slightly weakened, but solid. If you want to go into the geopolitical stuff, it's like, it's fucked up. It's just fucked up. So there's no point in talking about something that's as fucked up as this. You want to chart us up and tell us where we're going and do the suches and whatnot?
Yeah, we got a chart on the screen there. Let's just zoom way out real quick and look at a weekly. So just to recap, for looking at the weekly, these were those lows from May, end of April, which we took. We still have these volume imbalances in here on the weekly, but we took those lows, and after taking them, got a little bounce in here, and looking at the weekly, it's like, okay, well now we have this. We have to see what this candle does that we're putting in this week as far as what may or may not get left behind, right? If I go into the daily, again, these being those lows from May, and this, you've got this fair value gap here on the daily that we essentially filled in, right? Just a couple points left in that. If we say that it fills, I think that's 41.17.5, and we came down to like 41.20.23 or so. So you got a couple handles left in there, but for the most part, took those lows, filled that in, and that's where the bounce came in. So, at this point, looking at the daily, here you go, 41.22.25 was that candle's low. And like we talked about last week, these candles in here, for the most part, every candle was filled in except for this little guy right in here. You can see this little volume imbalance right there that we didn't lay a candle over, right? That's down at 40.70. Outside of that, everything has been filled in, right? So if we are going to break this candle's low, 41.22.25, then I'd probably be targeting 4100 and then this volume imbalance right down in here. That's just on the daily and what we're looking at. And you can see this volume imbalance above here, just over 4,200. to the upside. So moving into a 60-minute. Let's zoom in on this a little bit. And you can see this 60-minute fair value gap right in here. 41.53 is the bottom of that. 54.75 is the top. It's not, a big area like this was over here, but it's the only fair value gap here on the 60-minute until we get, below into this actual gap. And then again, this 41.22.25 below that. Go to a 15-minute. This is kind of the way that I'm looking at it. Coming into the day, we had this 15-minute fair value gap right here. I think this is what to watch early to see if the bodies of these candles respect this fair value gap or not, or if it's going to go ahead and give that up. Then I'd be watching for a reaction 41.56.25. It takes those stops and then pops right back up. Then target this 41.69, and same on the other side. If it goes up here first and takes this out and pulls right back below, you can look to short into a fair value gap, targeting back down here 41.56. That's kind of just going into the morning.
Seems like that area just above 4150 is like the red line for everybody. That I've seen anywhere on the interwebs. It's like that 4150, 4150, 4150. It's like anywhere between 50 to 49 to 54 to 56. It's like they all have their little spreads in there as far as so they can be brilliant. But that zone, is going to be fairly important as far as maintaining, obviously.
Right. Well, you can see, when we came down, what is this? 41.46.25. And this candle, 41.49.75. And right in here, this blue line, 41.54 half, going back to the 60-minute. Again, that was these lows back in here from May, right? So after kind of coming down into that 41.50 area, getting a bounce, going through it, maybe that was the overshoot, and now we're back above. So yeah, this is a key area in here. If that down move is complete, then yeah, we'd want to see this area in here hold. Because if we find ourselves back below it again, we may be coming down here under 4100 to that 40.75 area. So yeah, I think that support, at least thus far, hasn't acted as resistance, right? We didn't spend a whole lot of time down below it. So now, yeah, I would say it's pretty key that we hold up here. At most to the downside, maybe it fills this in, and then we can, continue up from there. But if we find ourselves below it and it becomes resistance, and we go take out 41.22.25, again, I'd then be looking at. I'd then target 4100 and below that down here. If we can get some momentum pushing to the upside, again, on the 15-minute, we look at those where where this 15-minute, this low came in before the bounce, and we look at this high right here. This is where the stops are sitting. So above 41.69, which has already filled in this 15-minute fair value gap, right? So if it goes up again, this has already been filled in. So this candle's high, 41.76.75. And then you got 41.85. And was that 41.90, 41.91.25, and then you still have this gap sitting up in here. So if we can start to get some momentum to the upside, push above that, that becomes support. Establish 41.80, and then above 91.25, and look to fill that gap in. And I think, if it can start to establish some of these levels, let's say 41.86.25, where this kind of, we were looking at this 15-minute fair value gap last week acting as resistance. We never were able to get through it. But if we can establish this area as an area of support, we can move up, pretty quickly. Again, all of these areas have been filled in. So if it starts to move up above here, we can find ourselves right back sniffing, 4,300.
In a matter of no time.
Relatively quickly.
Yeah, in a matter of no time. It's like if this market even starts sniffing the upside, it's going to be really interesting on flow. It is so bearish, Bender. It's like the level of squeeze that we can get is we can squeeze right back to 4,500 with how absolutely unbalanced flow and sentiment is right now. It's like, and it can happen in just a blink of an eye. The way this thing is kind of set up, it's like it's been a while since we've dealt with a market that's been this unforgivingly bearish.
Yeah. Well, and I think flow is going to continue to be key at these levels. It has been signaling recently, at these levels, it's kind of told us, hey, we're probably going lower, right? I think you were talking about, and it's something I want to track that I think would be good to track. If somebody in the room wants to track it, in Discord, I think it would be really interesting when we get that flow and you hear Hells say something like, I've heard him talk about Apple to the upside. They're going to get their whatever it is, 172.50 by next week or next month or whatever. I'd like to start tracking those and just kind of see how long does it take to get there on average, right? And how many of those do they, when they start signaling that, oh, Apple's going to whatever it is, 167, how long does it take us to get there? And what's the, what percentage of the time does it hit? Because if that's what flow is saying, if that's what they're targeting, I feel like more often than not, they're going to get it one way or another. They're going to get it. And more than just tracking whether flow has been bullish or bearish in a ticker, there's some tickers, Apple being one of those, that I think Hells is pretty good at identifying what that target is, right?
Yeah.
And I think it'd be good for us to track that.
It's like the ones that pop out in my mind that are most glaring. It's like there is that Apple 160 to 164 flow. There's some 155 flow in there also. Not a lot, but there's very little upside flow, with the exception of a couple of rights that came through, which is very defensive, coming into their ER. The one that has me the most, the biggest stare down, I would say, that I have as far as flow right now, which is very intriguing to me, is when IWM was trading in the mid 180s, they were hitting, like, let's say 170, 175 puts. And then they flipped out of those and they started hitting 165s. Now we have 145 and 155s on deck, spread out throughout the coming months. Now, they don't hit instantaneously. We get moves, we get shakes, we get that kind of stuff, but their targets continue to look lower when it comes to things like the IWM specifically, much lower. which is interesting to me. But yeah, no, it's like if we want to start tracking these out, I think it's a great idea, a really really good idea.
Well, and obviously we know that when you have some of those levels that they're target, like when you're talking about that IWM flow, if it's stacking, like they keep hitting these 155. Oh, look, they hit them last week and now they're hitting them again this week. You've said it a bunch that, hey, when we see them start peeling out of those,
let's go.
Then we can go. Maybe they're done with that trade, right? So, yeah, I think we need to do a better job of just tracking some of the heavier strikes and expirations, and again, especially when you're calling out a price target just based on flow, an area that it should be going, right?
Yeah, I think my tagline for that is by hook or crook.
Yeah.
They will get their mark.
Yep.
It's like the other one that was and it's so I'm sorry to get on a tangent, but that Jets flow that came in a couple of months ago, November expiration, they were hitting the 18 puts. I bought a couple when it was trading around 19, ended up running to 23, and then dumping out. Now I think it's like 14 or 16 or something like that. That flow was just point. But they were very transparent in saying what was going to happen. Home Depot also, that trade that I ended up putting on, I was bloodied out in that trade. Those November, I think 300s is what they were. They bloodied me out. They went from like 322 to 332, and then they ended up dumping down to where Home Depot is now. So some of that flow that looks ridiculous, that's further dated a couple of months, they're making a decision that it's gonna get there. The question is, how long does it take, and what kind of entry can you achieve along the way? And
monitoring when they decide that. It doesn't mean it has to go all the way there, right? Sometimes it's like, okay, well, I guess they decided either it's not happening or that's close enough. So tracking when if they flip, we got to pay attention to that.
Or if they double down, which they will double down once they start getting momentum. It's like some of the flow that you see is just, like the 25% rule. It's like, let's put 25% in here. Let's lay a line in through here and build off of this position. I'm in it. I'm with you.
All right, that's all I got.
Stonks.
Yo, what's up?
Did you play in the band this weekend?
We did have a band practice on Saturday. It was pretty fun, not gonna lie.
You guys get to go to band camp? Is that part of this? Does your woman know that, hey, there's a chance I might have to
or something?
Yeah.
I will have to start asking questions about that. Suspicious, but has potential. All right, let's get into some stuff. Let's see. We don't have Sun, so we'll cover his stuff first. Let's see. We've got headlines. What do we have? HSBC, they're doing $3 billion in share buybacks, and Evergrande, the Chinese real estate bankruptcy risk, they're saying they're given one final chance to appease its creditors or be liquidated. We saw headlines a couple of weeks ago. China's pumping in economic stimulus. So there's just a lot going on over there. We'll see what's going to happen. But Evergrande is that big real estate. They have a ton of debt, and then they kind of China said that we're going to slow down building, and then these guys are like, well, what the fuck are we supposed to do? Because we have all, that's our whole game. So a lot of uncertainty over there in China. Let's see what else we have going on. Largest borrow rates increased in a few different names: Sava, Siri, NVTA, Murder Burger Beyond, and TUP. The Skanks of America see limited risk to Match and Bumble. Elon's over there saying he wants Twitter Xing to become a dating site. I guess he also gave Twitter employees some kind of weird ultimatum about making the site make money because they don't know how to do that at the moment. So, but the Skanks of America say that they're not worried about any threats to real dating companies based on this Twitter news.
Elon's got
Upgrades.
to figure something out. It's like their daily active users are plummeting, absolutely plummeting. Um, I posted a chart last week that was absolutely grotesque. He's got to figure something out.
Yeah, I mean, we got to pull our likes over there on the Twitter, get those charts going. But yeah, it's a shit show. We've got upgrades. AbbVie, they were having some data last week that was interesting. Uh, Downgrade D-Dog, downgrade D's nuts getting downgraded. Upgrade CVX, and a bunch of other stuff that we don't really care about. So let's get into some charts here. Looking at gold, so we caught a monster move due to the macro environment on gold yesterday, Friday. So kind of what I'm watching over here. So looking at this kind of bear flag rising setup, the macro is going to be key. Gold also usually in play when we get Fed speak. So basically what I'm looking at here, let's look at the daily for now. So we've talked about in the past, a breakout on the Fridays has additional weight and significance because traders are willing to hold over the weekend. So potentially bullish with this candle on Friday. Have this level marked here because potentially ICT, Mr. T, failed breakout. If bull or bears had break even stops sitting at the top of this candle, relative equal highs with this candle, Mr. T would be saying, well, this could be a short once those bears are stopped out. So, but the other thing I'm looking at is we've got a lot of stops sitting above here. We've got a weekly fair value gap above in that orange box. So basically what I'll be looking at is I'm really going to be focusing on this 210.50 level. That's this previous relative equal high. We've got this fair value gap, and then we've got this trend line here if this was going to, in fact, end up as a bear flag. So that's kind of what I'll be looking at calling levels on gold. We do have potential smash days to the upside across the board. Again, failed breakout type setup. Close below the prior day's low on Friday. So we'll buy if we were to break above that high. So we'll get an alert that pops in the room. And same goes for Qs and the IWM. If we look at the NASDAQ with all the markup, let's see, we've got kind of similar look to what Bender walked through. We've got the new week opening gap below on the daily. We'll look at the daily here. Let's see. So we've got daily gaps that were left behind above. We've got this candle's low to this this candle's high to this candle's low. There's a small one here. We've also got a volume imbalance, but there's just a lot in this area, so I didn't mark it. But it's this candle's body to that candle's body. And then this candle high to that candle low, another daily gap left above. We also have this 4-hour volume imbalance below, kind of dug into it, but didn't lay the candle over. So we'll see what we get. And then if we really zoom out, was kind of tracking this big old bull flag that we fell out of and failed. So we'll see if we can, you guys have been talking about all the, we got Fed, we got the Apple, so it's going to be big week. See if we can get back in there. If we cannot, we've got this low that way down there, 14,144. If we lose that, then I'll be jumping over to the continuous contract because there wasn't much back here. So we can, I'll swap to that and jump out and call levels as we, trade live. But that's kind of what I'll be looking at on the NASDAQ. A lot of stuff above to kind of go rebalance. And then we've got the Rusty over here. So we've got this 4-hour gap left behind. We've got this key level that we've been looking at on the daily for the past couple of weeks. Looks like they may want to hold it. Now this is, if we go way back here on the daily, this 1667. A lot of reactions in this area, so it looks like we're back over it. Or no, that's 1647. Want to see if that can hold. We left a weekly gap, the orange boxes above, and then we've got this weekly volume imbalance that we sliced through but didn't lay the candle over, I believe. Yeah, there we go. So we kind of went up through it and back down, and then we're kind of stuck in this falling setup now, which, technically we'd be looking for the breakout of this could be bullish, but we've got a long way to go. We'd have to get through this weekly gap. We threw them up to that 1724.3. So we'll see what, Hell's talking about the flow on the IWM. We'll see what we get. Kind of use that as hints. We also have SMCI reporting this week, which is a huge component of the IWM and the Russell. So we'll see what we get over there on the Rusty. And then the other one, we got Apple. Apple, similar big falling setup over here, but need to see how that ER goes. Other than that, I'll kind of be looking at flow, calling these charts. We'll look at crude live in the room, and I think that's kind of all I got.
Yeah, it's definitely one of those weeks that we're walking into where I think what you said at the very end, kind of all I got. It's like there's a lot of moving pieces, a lot. It's like the crude is, and depending on what articles you're reading or whose notes you're reading as far as analysts, that kind of stuff, it's like there's a firm belief that crude is elevated by $6-7 right now just because they're wanting some type of, clue as far as how deep this Middle East thing is going to get. If it calms down even ever so slightly, you're going to see crude pull pretty heavily from what I was reading over the weekend. Now, all the other geopolitical stuff, it changes, second by second. So we just have to be kind of nimble with it. I don't know that you can fall in love with anything. I do think, Bender, that this is an area that you have to start looking to add, especially the ones that have already reported.
Yeah.
I think this is a zone to where it's not, we get in at full positions, but it's like, bite off 25% of a position. It's like AMD is one that I'm staring down right now so heavily, I don't know what to do. They haven't reported, but that's one that it's like, it's definitely in that little zone to where, you might get, another 3-4% down on it, but the upside is certainly there more than not. I think taking the time in these types of environment to go ahead and sort through how you want to try to accumulate wealth over the next 12 to 18 months, maybe that's a downside play. Maybe that's getting short NVIDIA. Maybe that's shorting Netflix over 400. Who knows what it is for you? But it's like these are the times and these are the areas that you really have to start paying attention to so you don't miss that boat and you aren't that dude going, all I want is a pullback so I can buy. It's like, geez. It's like, listen there, dude. It's like these are the zones that you have to start taking calculated risks. Not putting yourself in jeopardy, but calculated risks. If you're trying to accumulate wealth, if you're just playing the chart and you're comfortable with a 15-second chart, or you're both, whatever it may be, cool, rock on. But these areas and these moments in time, when you start hearing we're entering correction mode, to not be looking to add, this is when you get upside down and you're just like, well, I really like it if, Apple would come down to like $3 so I could buy it then. It's like, it's like you really have to start looking at things from a certain lens when you do get true corrections like we actually are in now. So that's all I got. You have anything else?
I don't think so.
I
think we covered it.
If Microsoft were $8, I would load the boat. I would back up the truck. It's like those cats. It's like, here's your shot, homeboy. Go ahead and bite a piece. Anyways, that's all I got. You guys have anything else?
No, nothing for me.
And look, if you think I'm wrong, How about this? If you think I'm wrong as far as, looking out to start accumulating, do this. Pick a handful of tickers and then play the game. Is it higher or lower 6 to 8 months from now from where it is now?
Yeah, I'm not
No,
I'm not disagreeing with you.
No, I'm not.
No, I know.
But I'm saying that the monkeys are like, well, we haven't gotten to zero yet. It's like, come on. It's like fair
I
value.
do think if you are somebody that knows how to collect premium, that there is opportunity. There's a couple tickers that that I will sell puts on, that I've kind of been doing. Sell some puts. If it ends up that I take those shares, then I take those shares, right? But if you're looking at it going, well, we could still go lower. Yeah, we could still go lower. But you can offset some of that, if you take an approach in building that position that, I'm going to sell a couple of puts this week, and maybe I'll sell, some more if it gets down into kind of the next zone, then I'll sell some more. Again, playing within your level of risk tolerance, maybe that means spreads, where you've got some protection just in case a nuke gets launched or something. But yeah, when we have these types of moves, I agree with you that there are certain things you can look at and go, well, I don't see any reason why it's not going to be higher in 12 months when you're looking at some of the best companies out there. You got to find those events that occur that allow you to get a discount.
Yeah,
because that's when the big boys are doing it. They're not,
the majority
when they tell you Nvidia to 700 when it's at 6 or whatever, that's not when they're buying it.
Right. And when they're saying Apple 230 and it's at 190 and you're sitting there loading in, it's like that's not what you do.
It might go to 230, but it doesn't mean they won't take it down on 160 first.
and we're in the 160s on Apple, right? We came down to 166, 160 for something like that. I don't know what we came down to, but it was enough to where it's just like, okay. No matter what it is, it's your bank account, not mine. And so if anybody wants to take quote unquote umbrage to anything that I'm saying, if it is hitting home, if it's too personal or anything along those lines, that would fall under the category of a you problem, not a me problem. And that's all I have to say about that. We got about 3 minutes until open, 2.5, 3 minutes. Let's have a good day. Love you, Aggie. We'll see you soon.